Uh,
Good evening, everyone. A very warm welcome to all of you. The topic for our today's discussion is GST annual returns, GSTR 9 and 9C. After the hectic schedule of audit and ITRs, the next due date, which is around the corner, is GST annual returns, and due date is 31st of December. We all know that. On 16th of, sorry, on 12th of October, the GST portal activated the tabs of GSTR 9 and 9C. And on 16th of October, they came out with FAQs clarifying how to make reportings in the new format of GSTR 9, which they have come out with. So we thought that this is the right time to discuss this changes in the formats and reporting requirements with all of you. Hence, we decided to do this topic. What I have done is I have prepared my PPT into two parts. The first part, I will be explaining the changes which are there in the form. And in the second part, I will explain as to how to report certain types of transactions and how to check the reconciliations, because ultimately GSTR 9 and 9C is all about reconciliations. So because of these changes in the forms, how our reconciliations will be changing, that is one aspect I'll be touching upon. So going to the first part of it, changes in the forms. Before going into the forms, for this from this financial year onwards, one new condition for filing GSTR 9 and 9C, which they have introduced, is that uh, the annual return format, the annual return for financial year 24-25 will get activated only if you have filed GSTR 1 and GSTR 3B returns of all the periods for this particular financial year. Till previous year, this condition was not there. But from this year onwards, they have introduced this condition. And what they are saying is that only if you have filed all your GSTR 1s and GSTR 3Bs of financial year 24-25, then only you will be allowed to file GSTR 9 and 9C for financial year 24-25. This is one new condition which they have brought in. And the idea is that they want to ensure that all the taxpayers are compliant. That is the main reason why they have introduced this particular condition. Now, Aman, I had shared formats of 9 and 9C with all of you on the over the email and in the WhatsApp group. So when we look at the format of GSTR 9 and GSTR 9, there are many tables in GSTR 9. So there are roughly around there are 19 tables in all. So when we look at table number 1, 2, and 3, those are the basic details like financial year, GSTN, legal name, etc. The real reporting starts from table number 4 onwards. And when we look at table number 4 and table number 5, these two tables deals with details of outward supplies. Table number 4 and table number 5, they deal with details of outward supplies. Now, for this particular year, they have not made any changes in vis-a-vis this two, as far as these two tables are concerned. They have not made many changes in this particular table. One improvement what they have done over here in this particular tables is that uh, so all the data basis GSTR 1 and 3B which we have filed, the data, most of the data will get auto-populated in table number 4 and table number 5. And last year they had introduced this one new return GSTR 1A, whereby if you want to make any amendments in your GSTR 1, you can file GSTR 1A and make amendments in your GSTR 1. This was the new return which they had introduced. So in this, what they have improvised is that whatever amendments you have made through GSTR 1 also, those amendments will also get captured in your table number 4 and table number 5 of GSTR 9. So this is one improvement which they have done in uh, as far as table number 4 and table number 5 is concerned. Now from table number 6 onwards, Sorry, there was some technical difficulty from our side. Yeah. From table number 6 onwards, the details of input tax credits are whatever ITC has been claimed in the financial year. Those details are reported from table number 6 onwards. वॉल्यूम मेरे को आवाज आ रहा है आप एक So in this table number 6, they have introduced one new row, table number 6A1, whereby what they are saying is that ITC of preceding financial year availed in the financial year, that they are saying that will have to be reduced from here. So basically table 6A is a auto-populated number whereby whatever ITC you have claimed in your GSTR 3B for the financial year, that will get auto-populated in 6A. But now in this year, they have introduced one table 6A1, whereby what they are saying is that if there is any invoice which is dated to financial year 23-24, but which you have claimed in your GSTR 3B of 24-25, that much ITC you reduced in your table number 6A1. So this is one new table which they have introduced for the first time. The logic behind introducing this table is that they want to keep table 6A restricted and limited to this financial year only, to financial year 24-25 only. They are saying is that whatever ITC is pertaining to financial year 23-24, you reduce it at 6A1 itself, so that going ahead in table 6, whatever ITC disclosures are there, that ITC is pertaining to financial year 24-25 only. This is the whole idea. And one good part is that in table 6A1, they don't want breakup into inputs, input services, and capital goods like they want in table 6B, and the tables when we go ahead, we'll see. In table 6A1, it's a consolidated disclosure of ITC of invoices pertaining to financial year 23-24 claimed in 24-25. This is one new table which they have introduced. Now let us try to understand this table with the help of an example. As to what will get reported over here. Let's take an example that Mr. A has claimed rupees 100 as IGST ITC in GSTR 3B filed for the month of May 24. Now the invoice is dated March 24. So the invoice is dated financial year 23-24. But this ITC is claimed in May 24, that is financial year 24-25. Now this invoice was reflecting in GSTR 2B of March 24. But ITC was claimed in May 24 because invoice was not booked in the books of accounts. So invoice was only booked in May 24. Therefore, ITC was for the first time claimed in GSTR 3B of May 24. However, this transaction was reflected in GSTR 2B of March 24. Okay, so this is the fact. So how will you disclose this? So table A will include this 100 rupees because in your GSTR 3B you had claimed it for the first time in financial year 24-25. So that will auto-populate in table 6A. Now, but because this invoice is dated financial year 23-24, invoice is dated for of previous financial year, you'll have to reduce this 100 rupees in table 6A1. Because going ahead, they want you to report only for transactions which are dated 24-25. In this particular case, because the invoice is dated financial year 23-24, you will have to disclose this in table 6A1, and so therefore 6A2 will be after giving effect of this table 6A1. So table 6A2 will exclude this 100 rupees of ITC which is dated financial year 23-24. So this is how table 6A1 will show the details. Now the next change which they have done is in table 8. So table 8 we all know is a comparison of ITC reflecting in GSTR 2B vis-a-vis the ITC which we have claimed in 3B. So table 8 is comparison of ITC as per 2B versus ITC as per GSTR 3B. Now up to last financial year, up to financial year 23-24, table 8 used to report details basis GSTR 2B period. So table 8A include all the transactions which were reported in GSTR 2B of that particular financial year. But now one change they have made in table 8 to say that table 8A will auto-populate only invoices which are pertaining to financial year 24-25. This is one change, one big change which they have got in table 8. I'll repeat, the change is that table 8A will auto-populate only those invoices which are dated financial year 24-25. And it will also include all the amendments which are made in transactions during the period. They will also be reflected in table 8A. Now, so what this essentially means is that if a transaction is financial year, if a transaction dated financial year 23-24, if it is reported in GSTR 3B of 24-25, that will not appear in your table 8A because the transaction is dated financial year 23-24. But simultaneously, if there is any transaction which is dated financial year 24-25, but it is reported in your GSTR 3B or GSTR 2B in financial year 25-26 for the first time, then that will also get reported in table 8A because table 8A includes all the transactions which are dated, invoices which are dated financial year 24-25. So this is one big change which they have got in table 8, and maybe the idea is that they want to have a year specific ITC reconciliation to say that reconciliation should only be of the invoices which are dated that particular financial year. So this is one change which they have got. Let us try to understand with help of some examples as to which transactions will reflect in table 8A and which will not. Let's take an example that an invoice is dated March 24. GSTR 1 for that particular that transaction is reported for the first time in GSTR 1 of April 24. So naturally that transaction will reflect in GSTR 2B of also April 24, and this transaction is not amended. Now will this transaction reflect in your table 8A of GSTR 9 for the financial year 24-25? No, because invoice is dated March 24, which is financial year 23-24, and therefore this transaction will not reflect in your 8A of financial year 24-25. Let us take the next example. Invoice dated April 24. This transaction is reported in GSTR 1 of April 24, and therefore it is reflecting in GSTR 2B also of April 24. Now this transaction is not amended. Will this transaction reflect in your table 8A of GSTR 9? Answer is yes, because this transaction is dated April 24, which is financial year 24-25. This transaction will also reflect in your table 8A. Let's take a next example. Third example. Invoice is dated March 25, which is financial year 24-25. Now this transaction is reflected in GSTR 1 of 25-26 for the first time. Naturally, so in April 25, it is reported GSTR 1. So naturally, this transaction will also reflect in GSTR 2B of April 25. And this transaction is not amended. Now, will this transaction reflect in GSTR 8A of financial year 24-25? Answer is yes. Even though this transaction is reflecting in GSTR 1 and GSTR 2B of financial year 25-26, but because the invoice is dated financial year 24-25, it will reflect in table 8A of GSTR 9 for financial year 24-25. Let us take the last example. Invoice is dated March 25. It is reported in GSTR 1 of March 25, and therefore it is reflecting in GSTR 2B also of March 25. Now this particular transaction was amended in GSTR 1 of September 25. So will this transaction reflect in your table 8A? Yes, it will reflect in table 8A along with the amendment which was made in September 25. So table 8A of GSTR for financial year 24-25 will include the amended figures of amendments whatever filed by the supplier. Those amendments will also be considered in table 8A reporting. Let us go ahead. The next change which they have brought in table in GSTR 9 is in table 8H1. This table 8H1 has been introduced for the first time, whereby what they are saying is that IGST credit which is availed on import of goods in the next financial year. Goods imported in current financial year, but ITC availed in next financial year. That has to be reported in table 8H1. So this is the new table which they have introduced for the first time. Now you all know that there are some tables which are optional and some tables which are mandatory. So there were some tables which were optional up to last financial year, but for financial year 24-25 they have been made mandatory. Some tables have been made mandatory. Which are those tables? Let us try to understand. Table 6E. So table 6E talks about import of goods including supplies from RCZ, SEZ, and there they want to there when you look at the format, there is a breakup of inputs and capital goods. So up to last financial year, there was no requirement to give breakup between inputs and capital goods. But from current financial year, they want you to give breakup of inputs and capital goods for the uh, for the details of import of goods. So this is one change in table 6A, which has a reporting which has been made from optional to mandatory. The next change which has been made, just a minute. Next change which has been made mandatory is table reporting of table 7. Now what is table 7? Table 7 deals with details of ITCs which are reversed and details of ineligible credits which are there, which are been reported in the current financial year. So table 7 deals with reversals of ITC. Now up to last financial year, so in table 7, when you see there are various sub rows, 7A which is reversal under 37, 7A2 which is reversal under 38, 7B which deals with reversal under 39, 7C which deals with reversal under 42. So there are many rows whereby reversals which whatever you have done under different rules, disclosures had to be made accordingly. Up to last financial year, there was no requirement to give separate reporting and which of ITC which was reversed under different rules. They allowed you to report everything under table 7H. But from this financial year, they are saying that you'll have to give breakup of whatever reversals you have done under different rules. You'll have to report them separately under each of the sub rows which are given in the particular table. So this is one change. And next, two big changes which they have done is table 12 and table 13. Now, what is table 12? Table 12 deals with ITC of current financial year, which is reversed in next financial year. And table 13 deals with ITC of current financial year, which is availed in the next financial year. So up to financial year 23-24, it was optional whether you want to report this particular details in table 12 or 13 or not. But going forward from 24-25 onwards, what they are saying is that table 12 and 13 reporting is also mandatory. So you'll have to mandatorily report whatever ITC which you have claimed in current financial year but reversed in next financial year, and ITC which is ITC of current financial year but availed in the next financial year. So this table 12 and 13 reporting has been made mandatory. So these are the prima facie major changes which they have made in format of GSTR 9. With this particular changes, though the changes appear very minimal and minimalistic changes, but they have far-reaching impacts as far as the reporting goes and as far as how we prepare the reconciliations. So with this background of understanding the changes in the form, we'll try to understand how will our reporting change in GSTR 9 and 9C and how we will prepare our reconciliations. Now, before going into disclosures and reporting reconciliations, I want you to highlight this two particular rules specifically. The reason being that if there are some reversals which you have done, reversals of ITC which you have done under this rule or under some other rule. Okay, so there will be some changes in the way you will be reporting this particular reversal. So it is important. So in subsequent slides, I'll be quoting rule 37 and 37A quite often. So, I'd better I give you clarity as of now as to what rule 37 and 37A is so that you can relate when I'll, explain the reporting requirements in subsequent slides. So rule 37 is reversal of ITC on account of non-payment of consideration to your vendors within 180 days from the date of invoice. So you all are aware that there is one rule which says that if you don't make payment to your vendor within 180 days from the date of invoice, then under rule 37 you have to reverse that particular ITC. So that is rule 37. And rule 37A says that if your supplier has not made the payment of tax to the government, then you need to reverse your ITC before 30th November of the next financial year. If he has not made the payment of taxes to the government, then as per rule 37A, you have to reverse the ITC. So these are the two rules, 37 and 37A. Just keep these rules in your mind. So with this background, now let us try to understand that how will your reporting change with these changes in the particular form. Let us take the first example whereby you have claimed ITC, reversed ITC, and reclaimed ITC in financial year 24-25 itself. So claim, reversal, and reclaim of ITC has been done in same financial year, that is 24-25 only. If that is the case, then how will you report your this particular transactions? So let us first deal with if the reversal is on account of rule 37 or 37A, then how will you report this? So the first claim of ITC of rupees 100, you will be reporting in table 6B of GSTR 9. So first claim you will be showing in 6B. Then the reversal which you have also done in financial year 24-25, because the reversal is on account of rule 37, you will be showing that reversal in table 7A of GSTR 9. We are referring to this particular column. And the subsequent reclaim of ITC, which also you have done in financial year 24-25 only, that ITC you will be showing in table 6H of GSTR 9. So what will happen is that 6B is plus 100, 7A is minus 100, and 6H is again plus 100. So 100 minus 100 plus 100. So that will become 100. So effectively you have claimed ITC only once, that is 100 rupees, and therefore you'll have to report your transactions like this. Now let us say that if your reversal is on account of any reason other than rule 37 or 37A, then how will you report this? So the first claim will be reported in table 6B. First rupees 100 will be reported in table 6B. Your reversal instead of 7A will be reported in 7H. And your subsequent reclaim, whenever you are reclaiming in for financial year 24-25 only, that reclaim will be reported in table 6H. So the only difference between reversal under 37 or any other rule is that if the reversal is under rule 37, then you will report reversal, you will report under 7 under table 7A. And if the reversal is under if the reversal is under any other rule apart from rule 37 or 37A, then you will report that reversal under table 7H. We'll go ahead. Now let us take a one more situation whereby you have claimed ITC and reversed ITC in financial year 24-25, and you have reclaimed that same ITC in financial year 25-26. Now that this claim and reversal can either be on account of rule 37 or 37A, or on account of any other reason, like invoice was not available on records, but it was reflecting in 2B. So you claimed and reversed, and then as and when the invoice was made available, you reclaimed the credit. So this can be the possible situations whereby you have claimed ITC and reversed ITC in financial year 24-25 only. But this ITC was reclaimed in financial year 25-26 within the prescribed period, meaning before 30th November of the next financial year. Now, how will you report this particular transaction? Now, say if the reversal is on account of rule 37 or 37A, first claim you will be showing in table 6B. 100 you will be showing in table 6B. Then when you reversed in financial year 24-25 only, because the reversal is on account of rule 37 and 37A, you will be showing this reversal under table 7A. And the subsequent reclaim which you have done in financial year 25-26, that subsequent reclaim you will be showing in table number 13. Table number 13 deals with ITC of the financial year availed in the next financial year. So this transaction is pertaining to financial year 24-25, but because it is availed by you in 25-26, you will be reporting this transaction in table number 13. So this is the reporting requirement as far as the reversal is under rule 37 or 37A. Now say if the reversal is on account of any other reasons apart from 37 or 37A, then your first claim you will be showing in table 6B. First claim you will show in table 6B. Your reversal you will be showing in 7H. Instead of 7A, you will be showing in 7H. And the subsequent reclaim which you have done in financial year 25-26, that again you will report in table number 13. So the difference is only that if the reversal is on account of 37 or 37A, you will report it in 7A. But if the reversal is on account of any other reason, then you will report in 7H. All other reporting requirement remains the same. Going ahead, different situation whereby ITC is claimed and reversed in previous financial year 23-24 and is reclaimed in 24-25. Now this can also happen. Say invoice was dated 23-24. It was appearing in your 2B in 23-24. But you did not receive the copy of invoice in 23-24. Invoice was received by you only in 24-25. So in 23-24 3B you have claimed and reversed, and you have reclaimed in 24-25. So this kind of situation can also arise. There can be one more situation whereby ITC was claimed in 23-24. Invoice was there, everything was there, but you did not make payment to your vendor within 180 days, and that 180 days was falling in financial year 24-25. Okay, sorry, reversed in 23-24. But then in financial year 24-25 you made the payment to that vendor, and therefore you reclaim that credit in 24-25. So in that situation, how will you report this particular transaction? So because ITC was claimed and reversed in financial year 23-24, you need not report this claim and reversal in your GSTR 9 for financial year 24-25, because first claim and first reversal was done in previous financial year. No need to report in the GSTR 9 of this financial year. You'll have to report only the reclaim component in this particular financial year's GSTR 9. So if the reclaim is on account of rule 37 or 37A, which is your 180 days this thing, then you will show this reclaim amount in table 6A1, because this is ITC of invoice dated 23-24 but claimed in 24-25. Sorry, you will show it in table 6H, not in table 6A1. I'm sorry. We will show it in table 6H if the reclaim is on account of rule 37 or 37A. But if the reclaim is on account of any other reason other than rule 37 or 37A, then you will report this transaction in your table number 6A1, because these transactions are of invoices which are dated financial year 23-24, but they are reclaimed in financial year 24-25. So again, I'll repeat, if the reclaim is on account of rule 37 or 37A, you will show it in table 6H. But if the reclaim is on account of any other reason, then you will be showing it in table number 6A1. The next situation is that ITC was claimed in financial year 23-24, but you have reversed this ITC in financial year 24-25. Okay. Now, no need to show the first claim amount because that was claimed in 23-24. So no need to show that in your GSTR 9 of financial year 24-25. But the reversal, because it was done in financial year 24-25, that you'll have to show in your table number 7 of GSTR 9 of financial year 24-25. So if the reversal is on account of rule 37, you show it in 7A. If the reversal is on account of rule 37A, then you show it in 7A1. If the reversal is on account of any other reason, then you show it in the respective table or table number 7H, as the case may be. Now this one is very important. Table 8C and table 13. Now what are these two tables? Let us first try to understand that. Let me read the particulars of table number 8C. Table number 8C says ITC on inward supplies other than imports and inward supplies liable to reverse charge, but includes services received from SEZ received during the financial year but availed in the next financial year up to the specified period. So it talks about ITC on inward supplies received during the financial year but availed in the next financial year. Table number 13 says ITC of the financial year availed in the next financial year. So when you look at it, the nomenclature of both the tables looks more or less similar. And up to last financial year, up to our GSTR 9s, which we have filed up to last financial year, the numbers which we had reported in table 8C and table 13 were matching to a large extent. Barring certain few adjustments, table amounts in table 8C and table number 13 used to always match. But now from this year onwards, table 8C will never match with table number 13 because of one major change which they have done in table 8, which we already discussed. That table 8A starts with invoice date and not as per to be period, and therefore our table 8C and table 13 will never match with each other. So what will be reported in table 8C? Table 8C, the invoices which are dated financial year 24-25 but which are reported in GSTR 1 of 25-26, and ITC for the first time itself is claimed in financial year 25-26. Only those ITC transactions will be reported in table 8C. So I'll repeat again. Invoices dated financial year 24-25 but reported in 1 and 2B of financial year 25-26 for the first time, and ITC is claimed in 25-26 for the first time. Only those many transactions will reflect in table 8C. Now, what will be reported in table 13? Table 13 is a larger set. Table 8C is a subset of table 13. Table 13 is a larger set. Table 13 will include all the invoices dated financial year 24-25, irrespective of the period of reporting, whether they are reported in GSTR 1 and 2B of financial year 24-25 or 25-26. But ITC is claimed in 25-26. So, irrespective of the reporting period, all the invoices dated financial year 24-25 but claimed in ITC claimed in financial year 25-26, all these transactions will be reported in table number 13 of GSTR 9. So, to summarize, table 8C is subset of table number 13. So, this is one big change in reporting as far as table number 8C and table number 13 is concerned. Now, next one, reconciliation aspect, which is very crucial. Till last financial year 23-24, what we had seen was that whatever ITC, which we see in our GSTR 3B console, GSTR 3B console is basically consolidation of all your GSTR 3Bs filed for that particular financial year. So whatever net ITC is reflecting in your GSTR console, which is table 4C, that used to match with your net ITC as per GSTR 9 table number 7J. Till last year, we have seen that this always used to match. But from this year, at least in this year, because we don't know in next year again they are changing the format or not. But at least for this financial year, this table 4C of 3B console will not match with your net ITC as per GSTR 9 table 7J. So what will you do to check whether they are matching or not? So you'll have to do table 6A1. The difference is only of about 6A1 table, which we discussed a couple of minutes back. 6A1 is your ITC of previous financial year, correct? So to match this ITC as per 3B console and GSTR 9, what you'll have to do is take table 6A1 of GSTR 9, which is ITC of previous financial year availed in current financial year. Add net ITC as per GSTR 9, which is table 7J. You add both these figures, and this figure should match with your net ITC as per GSTR 3B console. So this is one change. This is one change in the reconciliation format, which we'll have to adopt to match our numbers. Next is reconciliation of unclaimed ITC. Now, obviously, there would be some ITC which will always be unclaimed, transactions reflecting in your 2B, but you have not claimed in your 3B. So how do you prepare reconciliation of your unclaimed ITC? You take table 7H of your GSTR 9, which is your ITC reversed during the financial year. Reduce table 6H of GSTR 9. Table 6H shows the reclaim of ITC. So reversal minus reclaimed minus table 13. Table 13 is ITC of current financial year claimed in next financial year. So table 7H minus 6H minus table number 13. this figure will show you amount of unclaimed ITC. Okay. Now, not necessarily all whatever is being coming as unclaimed ITC is essentially your unclaimed ITC. This will also include some ineligible ITCs, meaning there are some transactions in your 2B which are ineligible ITC, and in your books of accounts you had never claimed that ITC. So those types of ITC will be forming part of this unclaimed ITC. You'll have to exclude those unclaimed ITCs. There would also be some wrong ITCs, some transactions wrongly reflecting in your 2B and you have never claimed in your books of accounts. Those transactions will also, become part of this particular reconciliation. So ignore all this ineligible ITCs and wrong ITCs and balance whatever is the amount which is coming. That is the actual, ITC which is unclaimed and which you need to see. And, if it's not claimed, then naturally after 30th November, that will become the lapsed ITC. Next is table number 4D1. You all are aware that there is one table 4D1 of GSTR 3B where we disclose ITC which is reclaimed, which was reversed in the earlier tax period. So say for example, there was one ITC which you had claimed and reversed in last financial year, last month. But if you are reclaiming that credit in this particular month, then you have to report this reclaim in table number 4D1. So this is one reporting requirement which is there in GSTR 3B. How do you reconcile this table 4D1 of GSTR 3B with your GSTR 9? You take your table number 6A1, add table 6H of GSTR 9. When you will add both these tables of your GSTR 9 of current financial year, this should essentially match with your table 4D1 of GSTR table 4D1 of GSTR 3B. There would be some difference. You might encounter some difference, and the reasons might be that some ITC is pertaining to financial year 23-24, which is claimed and reversed in GSTR 3B of 24-25. This can be one of the reasons. Or if you have reclaimed some ITC on account of annual ratio, this thing rule 43-43, rule 42-43 reversal. If you have reclaimed some ITC, then there would be some difference on account of that. Otherwise, your table 4D1 of GSTR 3B should match with table 6A1 plus table 6H of GSTR 9. So these were some changes in the reconciliations. How we'll be checking our GSTR 9s and how we'll be preparing our reconciliations for GSTR 9 because of reporting changes in primarily in table 6 and table number 8 of GSTR 9. There is only one change as far as GSTR 9C is concerned. Let us try to understand what is that particular change. Let us take an example that ITC claimed in GSTR 3B of financial year 24-25 is 125 rupees. Now out of this 125 rupees, the ITC of invoices dated for financial year 24-25 is 100 rupees and ITC of invoices which are dated 23-24 is 25 rupees. Okay. Now, as far as 3 or 3B is concerned, you have claimed this entire 125 rupees in your GSTR 3B for financial year 24-25. Okay. But as far as your 9 is concerned, in 9 we saw that there is one new table 6A1 which excludes the invoices which are dated previous financial year. Okay. So in your GSTR 9 net ITC will exclude this 25 rupees because it is ITC dated 23-24. Okay. Now let us come to table number 12 of GSTR 9C. So table 12A of GSTR 9C starts with ITC availed as per audited financial statements. So basically your ITC register. Now essentially your ITC register will capture 125 rupees only because in your 3B of that entire financial year you have claimed 125 rupees. So you will report this 125 rupees in table 12A of GSTR 9C. Now coming to table 12E of GSTR 9C, it says that ITC claimed in annual return GSTR 9. Now your net ITC in GSTR 9 will show only 100 rupees. It will exclude this 125 this 25 rupees because the 25 rupees you have already reduced in table 6A1. So it will report, you'll report over here 100 rupees. There will be difference of 25 rupees over here. Now, till last year, there used to be no difference over here. There used to be zero over here. But from this year, at least in this year, there will be this difference of 25 rupees. So this difference will always have to match with your table 6A1 of GSTR 9. So whatever difference that will be reported in table 12F of GSTR 9C, that has to match with table 6A1 of GSTR 9. So this is one change in GSTR 9 reporting. So all the disclosure requirements and reconciliations I've already explained. I will be sharing my PPT in the group also for your future references. Going forward, our team members would have already started reaching out to you, asking for data, whatever is not available with us. If you are doing your and if you are doing your monthly compliances, most of the data would already be available with us. But if you are not doing your compliances, we would be requiring data from your side to start with the audited financial statements, then trial balances, GST ledger mappings, branch books, etc. Sales register, credit debit note register, purchase register, ITC register, fixed asset register, RCM liability register, reconciliations of advances, exports, SEZ, etc. All this data would be required, and I'm sure our team members would have ideally already reached out to you, or they'll be reaching out to you soon. Please share this data with them well in time, so that we can plan our compliances well and ensure that our GSTR 9 and 9C are filed in time. This is it from my side. Thank you so much, everyone. And I'll take some questions now. I think there are already some questions in chat box. If anyone has, any other questions, please raise your hands. We'll unmute you from here and you can ask your question. Unshare karo na. Screen sharing stop. Yes, Naina, you can ask your question.
Yes, this said Hashim from Express Global,
Okay.
and with me we have a team of compliance who's handling all the compliance. We have mentioned something section rule of 37A.
Yes.
If supplier has not paid the GST to the government, then we need to reverse that amount and need to show this 37A. So if you that payable to the government is the summary of the tax ITC and output taxable plus minus that you need to pay the summary amount to the GST government. Right. If I have an ITC of 1 lakh and I have an output of 2 lakhs, so I will make a liability of 1 lakh to the government.
No, in this financial year's this financial year's GSTR 9, you will be showing ITC which you have reversed in November of financial year 24-25. So ITC pertaining to 23-24, which you have
Hmm.
reversed in 24-25 on account of Rule 37A, that you will be reporting in GSTR 9 of financial year 24-25.
No, somewhere you have mentioned if amount is not paid by supplier.
So that is Rule 37A. It says
Ah,
that if your supplier has not made the payment, supplier has filed GSTR 1, and therefore the
correct,
transaction is reporting in your 2B. You have claimed the
correct,
credit because that transaction is in your 2B. You have a copy of invoice. You have made payment to your vendor, right? So you
right.
have claimed the credit, but your supplier has not filed his GSTR 3B and he has not made the payment of tax. So what government says is that, so say for example, if this transaction is pertaining to financial year 24-25. So
Hmm.
till 30th November of 2025, if this supplier does not file his 3B and does not make payment of this tax, then you will have to reverse your ITC in GSTR 3B, which will be filing for the month of October 2025. So all this
Okay,
data
but
is already available in your, in your GSTR 2B. There is one GSTR 3B filing status. So you can
okay,
there is one column already over there. You can check that column whether your suppliers have filed 3B, they have not filed 3B, and accordingly you can do this ITC reversal in Rule 37A. And
okay, noted.
as and when subsequently, if your supplier files this 3B and pays the tax to the government, then you can reclaim the credit. There is no outer time limit to
Okay,
reclaim the credit. As and when he pays the tax, files his return, you can reclaim the credit.
okay, noted.
Yes, Mr. Saurabh.
Good evening, sir. Am I audible?
Yes, yes.
Saurabh Jajodia.
Yeah.
Hello.
Yes, yes. Tell me.
Hello.
Yes, you are audible.
Sir, can you look in the chat box? I have raised my query. Here is audio problem. So can you request to check the chat box?
Yes, sir. Yes, sir. From which company are you, sir? Okay, so his query is if you have reversed ITC on account of GST departmental audit through DRC 03, then should we report this in GSTR 9 of financial year 24-25? No, because it's not forming part of your GSTR 3B reporting. You will not show this in your GSTR 9 reporting. However, there will be some difference in your ITC register vis-a-vis your 3B reportings. So what you can do is maybe in 12 you can in table number 13 of your GSTR 9C you can insert a note over there saying that there was this ITC which you have reversed by DRC 03, and maybe you can give a reference number of your DRC 03 as well. Next question is if you have paid and claimed ITC through RCM due to RCM of foreign bank charges from 1718 to 20 GST or 3 So if you have paid RCM and claimed ITC in financial year 24-25, you will report those liabilities and ITC which you have claimed in your GSTR 9 of 24-25 only. So RCM reporting will be qua that particular period. In which period? So because you have paid this tax in 24-25, you will report liability in 24-25, and because credit also you have claimed in 24-25, that you will show in table number 6 of 24-25 only. Yes, one person has asked, is it mandatory to file GSTR 9 and 9C? So there is a turnover limit that if your turnover is above 2 crores, then you have to 9 GSTR 9 is mandatory. And if your turnover is above 5 crores, then GSTR 9C is mandatory. Below 2 crores, no need to file either 9 or 9C. So I think these are the questions which are there. If anyone has any other question, please raise your hand. We'll unmute you from here. Someone has asked what is the difference in table 8C and table 13. So as I already explained, madam, table 8C will include invoices which are dated financial year 24-25, but which are appearing in my GSTR 2B in financial year 25-26 for the first time. So whatever credit I have claimed in 25-26 of invoices dated 24-25, reported in 25-26, that will only come in my table 8C, whereas table 13 will include all ITC of invoices which are dated 24-25 but claimed in 25-26. So this is the difference in table 8C and table 13 of GSTR 9. So I think we don't have any further. Is it update table 8 after filing? Yeah, so table 8, they have also clarified that table 8A will keep on changing until all your October compliances are done. So I think after 30th November, this table 8A figures will freeze. Otherwise, up to 30th November, at least all your table 8A numbers will keep on changing basis the compliances which are done by your suppliers. So I think all the queries are answered. Thank you so much everyone for your patient hearing. See you in the next one. Thank you.